The crypto space is full of innovation and promise, but some projects attract more hate than hype. Why do these projects divide opinions? Today, we'll dive deep into the most controversial crypto projects that are still active: XRP, TRON, Hex, Ethereum Classic, and Bitcoin Cash. Stick around to find out why some consider these projects a no-go. Hey everyone, welcome back. I'm Zhenya, software engineer, head of research at EVG Capital, and crypto investor since 2017. In 2011, engineers David Schwartz and Jeb McCaleb began a financial infrastructure similar to Bitcoin that would use substantially less energy and drastically reduce transaction time. In September 2012, Chris Larsen and McCaleb co-founded the corporation OpenCoin that was renamed Ripple Labs in 2015. XRP, developed by Ripple Labs, has always been a polarizing force in the crypto space. While it promises to revolutionize cross-border payments, its history is marred by controversy. Get weekly crypto market insights, technical analysis, and trading setups delivered straight to your inbox. No fluff, just actionable insights we use ourselves, all for free. Don't miss the next big move. Click the link below and subscribe today. XRP's reputation suffered due to its perceived centralization during an era when decentralization was celebrated. Unlike Bitcoin and Ethereum's decentralized proof-of-work systems, XRP operates on a consensus protocol managed by a small group of validators, many tied to Ripple Labs. Additionally, a significant pre-mined supply concentrated ownership, alienating decentralization advocates. Ripple institutional focus further distance it from retail crypto purists. Before stablecoins, XRP offered fast and cheap transactions with minimal volatility risk, removing the need for stable assets during transfers. However, advancements in other blockchains and stablecoins have since matched or surpassed XRP's speed and efficiency. Ripple abandoned smart contract platform Codius, left XRP lagging behind ecosystems like Ethereum. In December 2020, the SEC accused Ripple Labs of selling XRP as an unregistered security, leading to widespread delistings. A 2023 ruling declared XRP not a security for retail sales, but a security for institutional sales. The ongoing appeal continues to cast uncertainty over XRP regulatory status. Despite this, Ripple Labs remains a key player in blockchain solutions, though XRP's outlook remains uncertain. Ripple Labs paid $700,000 in 2015 for violating AML protocols. A dispute with R3 in 2017 over discounted XRP token sales further strained Ripple's public image, though it was eventually settled. Ripple has secured partnerships with major financial institutions like Santander, SBI Holdings, and Standard Chartered, and integrated with CBDC pilot programs. The launch of Ripple Payments has driven adoption in regions like Asia-Pacific and the Middle East. Ripple is also working on integrating smart contracts on the XRPL, exploring DeFi applications, and enhancing interoperability. Despite ongoing regulatory battles, XRP remains relevant, recently surging 4x in November 2024 to reach an all-time high of $2.90, surpassing several DeFi tokens. Even after correction, XRP stayed above its previous all-time high of $1.97. If you're curious why some 2017 and 21 bullrun tokens aren't pumping, check out my other video. However, XRP's value narratives have faded. Stablecoins dominate liquidity pools, and XRP is no longer essential on its own ledger, with assets like ETH potentially replacing it. The community's loudest voices now include conspiracy theorists pushing unrealistic valuations like $10,000 per token, despite repeated debunking by Ripple leadership. While Ripple Labs may thrive as a software company, XRP as a token appears increasingly sidelined in the evolving blockchain space. Its golden era, much like the days of early XRP chat, seems to have passed. TRON, founded by Justin Sun in 2017, set out with the ambitious goal of creating a decentralized internet focused on content sharing and entertainment platforms. TRON launched with significant hype and an aggressive marketing strategy led by Justin Sun. Initially, it was an ERC20 token on Ethereum before migrating to its independent blockchain in 2018. TRON acquired BitTorrent in the same year, signaling its ambition to integrate decentralized file sharing into its ecosystem. TRON has been criticized for plagiarism allegations. The white paper was accused of copying sections from other blockchain projects. Overhyped marketing. Sun's flamboyant promotion style often drew skepticism. Centralization concerns. Critics argue that a small number of nodes control the TRON network, raising concerns about true decentralization. TRON's native token, TRX, has shown resilience in market downturns. In November 2024, TRX saw a 160% price surge, outperforming many Dino tokens and updating its all-time high. After December correction, it's still up 50% from 2021 high. It remains one of the more stable assets in the volatile crypto market. TRON has formed strategic partnerships with BitTorrent, Poloniex, and Samsung Blockchain. Despite its criticism, TRON remains one of the largest blockchain ecosystems with a focus on scalability, low fees, and stablecoin utility. While Justin Sun remains a polarizing figure, his influence has kept TRON relevant in the blockchain landscape. Founded by Richard Hart in 2019, HEX markets itself as the first blockchain certificate of deposit designed to reward long-term holders. Richard Hart aggressively marketed HEX as a revolutionary product, attracting both interest and skepticism. HEX operates on a staking model where users lock their tokens for a specified period in exchange for interest rewards. The longer the stake, the higher the yield. This approach incentivizes long-term holding and minimizes short-term trading volatility. HEX experienced explosive growth in 2021, reaching an all-time high of 51 cents, but faced sharp corrections. In 2024, HEX saw moderate recovery but remains far below its peak. While HEX lacks significant institutional partnerships, its community remains active. Richard Hart launched Pulse Chain, a Layer 1 blockchain, to address Ethereum's high gas fees and provide a new home for HEX. Despite controversies, HEX continues to attract a loyal community of stakers, and Richard Hart remains an influential, albeit polarizing figure in crypto. Ethereum Classic, ETC, emerged as a symbol of blockchain immutability following one of the most significant events in cryptocurrency history, the DAO hack of 2016. Ethereum Classic was born from a hard fork of Ethereum after a hacker exploited vulnerabilities in the DAO, draining 60 million worth of ETH. The Ethereum community voted to reverse the hack, but a faction of purists rejected this rollback, arguing that code is law. They maintained the original Ethereum blockchain, which became Ethereum Classic. Ethereum Classic retains the original proof-of-work consensus mechanism, ensuring a decentralized and secure network. The blockchain supports smart contracts and decentralized applications, albeit with less developer activity compared to Ethereum. Security issues. ETC has suffered multiple 51% attacks, notably in 2019 and 2020. Due to lower network hash power, raising concerns about security vulnerabilities. Developer exodus. Many developers shifted focus to Ethereum, leaving Ethereum Classic with limited innovation. Market position. ETC is often perceived as a legacy chain rather than a thriving ecosystem. ETC experienced a major rally in 2022, driven by Ethereum's transition to proof-of-stake, which redirected miners to Ethereum Classic. Prices surged 3x during that period, peaking at around $70. Despite challenges, Ethereum Classic maintains partnerships with entities like ETC Cooperative and Input-Output Hong Kong, which aim to ensure network sustainability and ongoing upgrades. While ETC offers stability for proof-of-work miners, its long-term prospects depend on renewed developer interest and ecosystem growth. Bitcoin Cash (BCH) emerged in 2017 as a result of a continuous hard fork from Bitcoin, driven by a fundamental disagreement within the Bitcoin community over scalability and transaction fees. Bitcoin Cash was born out of a heated debate surrounding Bitcoin block size limit. Bitcoin developers insisted on maintaining the 1 megabyte block size to preserve decentralization and network security. However, proponents of larger blocks, led by figures such Roger Ver and Jihan Wu, argued that increasing the block size to 8 megabytes would allow Bitcoin to scale and support faster, cheaper transactions for daily use. On August 1, 2017, Bitcoin Cash officially split from Bitcoin, inheriting the original Bitcoin ledger up to that point. Bitcoin Cash primary differentiator is its larger block size limit, which started at 8 MB and has since been expanded to 32 MB. This allows for more transactions per block, enabling lower fees and faster confirmation times compared to Bitcoin during periods of congestion. However, this larger block size has led to concerns about node centralization, as larger blocks require more storage and processing power, potentially limiting the number of participants who can run full nodes. Centralization concerns. Critics argue that larger blocks increase hardware requirements, reducing decentralization. Brand confusion. The similarity in name and branding between Bitcoin and Bitcoin Cash has led to ongoing confusion among new users. Community fragmentation. Forks within Bitcoin Cash itself, particularly with Bitcoin SV, have caused reputational damage and diluted its community strength. In 2018, another continuous fork resulted in the creation of Bitcoin SV, Satoshi Vision, further fracturing the Bitcoin Cash community. It was led by Craig Wright, who controversially claims to be Bitcoin creator Satoshi Nakamoto. The project has been criticized for its centralization tendencies and legal actions against its detractors. Bitcoin Cash reached its all-time high of $4,355 in December 2017 during the broader crypto bull run. However, BCH has since experienced significant price declines, stabilizing between $300 to $700 in 2024. Despite the bearish trends, BCH remains a top cryptocurrency by market cap and continues to see occasional speculative price surges during broader market rallies. BCH is supported by major exchanges including Binance, Coinbase, and Kraken, ensuring liquidity and access for traders and investors. While it has struggled with branding confusion, community splits, and limited mainstream adoption, BCH continues to offer a functional, low-fee alternative for day-to-day transactions. While it has struggled with branding confusion, community splits, and limited mainstream adoption, BCH continues to offer a functional, low-fee alternative for day-to-day transactions. Its long-term success will depend on sustained adoption, technical improvements, and the ability to differentiate itself from Bitcoin and other faster, cheaper blockchain solutions. So, should you invest in these projects? It depends on your risk tolerance and investment philosophy. XRP, TRON, Hex, Ethereum Classic, and Bitcoin Cash all have active communities and ongoing developments, but their controversies cannot be ignored. Always do your research and trade carefully. Which of these projects do you think deserves a second chance? Or are they all doomed to fail? Let us know in the comments below. Don't forget to like, subscribe, and hit the bell for more deep dives into the crypto world. Thanks for watching.